So, Jitendra, is it enough to boost everyone else?
Well, it's a reminder of the secular tailwinds the internet companies have. Now, if you look at the end market growth in general across the board, talk about mobile advertising, mobile search, e-commerce, it's pretty strong. That's not changing. What's changing is the margin worries about these companies in the second half with all the compliance spending and spending on data centers and such that's happening. So margins is still the overhang and worry in general, but the organic demand behind the sector continues to be strong.
You continue to be optimistic about Netflix. Can Netflix continue to keep up this kind of growth, given a lot of the growth is coming from international markets where they are going to be required to make country-specific, language-specific content, and that's a lot of different audiences.
True, but that is a cheaper production budget, and we're looking for them to continue adding at a similar pace of growth internationally, even perhaps accelerating the number of subscribers, even if the rate of growth slows internationally. We've known for some time that the real growth story is in international. The U.S. is slowing to a modest pace of growth here, but as long as they can continue to add, we're talking, 30 million or so subs per year, most of that internationally, and the production budgets for those localized content are relatively cheap, and they drive local viewers. So I think that's where the growth comes from.
Jitendra, let's talk about Amazon, since Amazon, of course, has a competing service to Netflix. How do you expect, Amazon Video to evolve, given that Netflix is showing such strong growth, strong original content? They've just bought this studio in New Mexico where they're going to produce more content, and they say, it's only going to be more of the same.
Yeah, Amazon's going to continue to ramp up the investments in original content. Clearly, Netflix is showing how this is helping by localizing and regionalizing and things like that. They're trying, the hits are missing yet, but this is a part of a grander strategy for Amazon of attracting more Prime members, increasing spending per Prime member, looking into video advertising far out in the future. So this is a very critical element for them. So they're going in with a different agenda, but we continue to believe they will increase spending.
Some analysts express concern about Netflix spending $1 billion on a physical studio, when real estate can be a risky investment. This, of course, at the same time that they're continuing to invest billions and billions of dollars in original content. Anyway, is it worth it?
My understanding is they got a pretty good deal for that Albuquerque studio, and if they've been paying a lot of money to rent studio space elsewhere to do more and more original content, then it might be a good deal for them. The Netflix story is very much about original content production now, not just licensing originals like House of Cards, but actually making and producing their own shows now. More and more of the value that they drive over time is going to come from that, and so if they can achieve a lower cost to produce those shows, that's going to help their bottom line.
Netflix believes it has a huge potential in India. That said, Amazon is already strong there. There are other local competitors. Do you think that can be where the next 100 million comes from?
I wouldn't put 100 million subscribers as the achievable target number there. I don't know what the number is. It's quite an expensive service for India. You've got a lot of competing services from Eros to Star that can be much cheaper for the average consumer. So it's a very, very different sort of a marketplace. There is a lot of opportunity because it is a population that loves dramatic content, and I think there's a huge growth opportunity. I don't know if 100 million is a real number, but it's going to be a major growth driver for them for sure.